everyone. Thank you for watching us. Today we are having David, the founder of MyTrade. Thank you so much for coming today. And could you please introduce yourself in a couple of sentences?
Okay, thank you for asking us to join. So MyTrade is founded in 2021. And we try to solve the problem with DEX. That's our starting point. And unfortunately, we didn't continue with DEX operation, and we pivoted into a bigger pain point in the sector of market making. And that's our the real business now. We're trying to scale and trying to solve this transparency issue in secondary markets, where most market makers, when they operate in a black box, that's where a lot of, stealing of assets can happen. Lots of attacks can happen. And as a result, most projects die within 6 months. And even those raise millions, they can die in a year. So we're trying to solve that problem, which is a much bigger pain point and a clear pain point, and we tackled it and solved it.
Nice. Thank you so much. Very interesting. And please be honest. What's one thing you believed about crypto trading back then when you started that you now completely disagree with?
Initially, as a project founder who has experience in primary market, like from raising funds, building products, we thought secondary market is more regulated, or at least is similar to kind of the Web2 stock market, where things are more transparent and more legit, but in reality it's not. So as we had our first project back in 2018, when we got listed the first time, then we realized we're losing money really fast, and we couldn't really understand how we lost money. So we had to really dive into the transaction history, where there are millions of transactions, and we couldn't wrap our head around initially why there was so much volume and so much transaction in the trade history. But I had to go through all of them eventually to figure out how we lost money. And then I came up to the conclusion that because it's in a black box, and because of the space is not regulated and the market makers can do whatever they want. So that's why we see a lot of rich market makers. That's where a lot of the illegal activities are. But the worst part, the project gets killed pretty much within a year due to all these thieving action behind the scene. So that was something totally unexpected. Of course, a lot of the first-timers projects coming in, they will all pretty much pay the same tuition fee up until the second or third time around. Then they realize finding the market makers is probably the hardest part.
Yeah, thank you. Very interesting. And what does this full transparency actually look like in MyTrade market making? Can you give us an example maybe?
Yeah, so the most important part is to let the founders are fully aware of the strategy that's happening behind the scene. So the founders should be expecting the exact amount of volume, the exact amount of liquidity. They should be fully aware of that, right? And one of the most illegal aspect of market making is what we call a taking orders, or a taking role. Because as a market maker, the reason it's called a market maker because we're supposed to make orders on a order book. We're not supposed to take orders. So at any time, if any market maker is starting to take orders, that could get involved into 3 illegal actions, such as wash trading, where you got to do a self-trade. So you got to take your own orders, as well as all the pump and dumps. You got to take orders again to bring the price up and down. And thirdly, which is most frequently happen, is inside trading. Again, you have to take orders using company funds. So all the taking action are actually illegal, as well as is not good for the project, right? That's where the stealing can happen with the inside trading, taking orders. So we as a market maker, we have to focus on just making order in a passive and organic way. So we should not be manipulating, or should not take any orders. So this is something the founders can check in their own trading transactional history, because the funds are in their own accounts, right? They have full custody and control of their own funds, as well as their data trading history. So by just looking at all the orders, you should see all maker orders. So you should not see any taking order. That's the best way to check or filter through who, as a market maker, is actually legal and legit, which only making orders.
Yeah. Thank you. So projects stay with you because of the transparency and like full transparency, right?
And now the legality as well. So if any utility token long-term projects wants to stay out of legal troubles, then again, we would recommend us, because right now we're the only transparent and endeavor to be fully legal market maker, meaning we're not going to conduct any shady activities, no taking orders, right? So we will stay out of trouble legally as well. That's something we can help projects with as well. So if you chose the wrong market maker, you'll see all these fake value, we call it wash trading or volume support in a nicer term. And there are tons of pump and dump activities with those black box market makers. So you got to be very careful on choosing the right market maker to be not only transparent, but also to help projects stay legal.
Yeah. What are the most common red flags that you see projects make when choosing their market maker?
Well, the red flags come from both sides. So the first side is, let's say, the project, let's say memes projects that typically wanted to have big value. They typically wanted to do market manipulation. So usually the requests come from the project side. So where we have to come in and play is to educate the founders about these legal issues and the penalties potentially if caught. Right? Especially SECs are going after all these illegal activities. So we would recommend the founders to learn a little bit more about the legal and penalties if they were to still deciding to go into the market manipulation side of the things, or the fake value, right? So give them a second thought. So the clients that we onboard sometimes, after they have learned all these the legal penalties, then they decided to stay legal, which is what we want, right? But then there are still going to be some projects that on purpose they wanted to have all these illegal activities. Then unfortunately we have to turn them down, and they are going to choose other market makers, of course, but they're doing it at their own risk. So that usually come from the project side. The second side that comes from the market maker or the exchange sometimes. So if some exchange deciding to have a value requirements, let's say a daily trading value, if they still has these requirements, then the projects, especially the older ones, they're not going to have that much organic value from their community. Then the projects are forced to come to us saying, well, the exchange are enforcing value requirements. Can we meet the requirements? So as a market maker, then we have to say, depends, right? If we can do some sort of marketing activities with real organic value, we can pass the requirements maybe for just that reviewing period, maybe in that 1 or 2 days. Maybe we can pass it with organic value, but we cannot fake it, right? So if the exchanges are going to have a consistent, let's say on a weekly basis or weekly review or monthly review, where they have a consistent value requirement, then we usually suggest the projects to just delist from such exchange, because those exchanges will cause legal troubles for the project. And sometimes we will interface with the exchange as well to say, please remove such requirements, because it's going to put everybody in a legal risk. So if the exchanges are willing to do more due diligence on the legal matters, then a lot of them will actually remove their requirements. And then the third thing is the third side comes from the market maker side. So if the project finds the wrong market maker, then it's actually very possible the market maker will pitch all these illegal activities saying we can, let's say, make a lot of great value, right? Great price maintenance. I mean, all these pitches from the other illegal market makers, they will have some sort of effect on projects. So when the project's lack of knowledge or lack of the legal side of the things, they may potentially fall for that. And everybody wants greater price action. They all want bigger value. But if they lack of the legal education from our side, they may very likely pick someone that they are not aware they're illegal, but they'll eventually find out by the time they speak with us.
Yeah, that's complicated. And have you ever turned away a project for compliance reasons?
Oh, yes. Yeah. So we definitely have to do our education first. And if any project says, well, we just have to have the fake value, if that's what they insist, then I have to turn them away. And they just have to find their own market maker. But the thing is, there are tons of other market makers that are willing to do the fake value, like probably 90% plus. So it's very easy to find an illegal market maker that will meet all these requirements. So we do have to turn them away.
Yeah, thanks. Also, there is MyTrade cashout. How do you exactly help with safe, fast, and clean cashouts?
Yeah. So first of all, the cashout is designed for investors. Right? It's the same tool, the same cashout tool we have for projects. So we have extended this feature and made it available to investors. And the reason why we wanted to do that is many investors are knowledgeable in primary market, but they may not have the tools to do it on secondary market. So when investors cash out, if they don't have the tools, they can do, usually manually. Right. If they see there's a large DEX liquidity pool, or if they're on tier 1 exchange, they usually sell manually in large chunks. But when they do a market sell, the problem is it's possible to create a big slippage in a downtrend. So we're going to see a potentially red needle going down, which may not look that great if the slippage becomes too big. So some investors, when they want to, sell on tier 2 exchanges, they can only sell a few $100s at a time. If they sell a few thousand to or more than 10K, you'll see more than 10% slippage downwards, which really doesn't look good on the project, right? And investors are selling at a bad price as well. So in order to solve this problem and create a lesser sell, so we use a cashout bot to sell $100 at a time for investors. So it doesn't hurt anybody. So on the project side, you won't see any slippage because it's a limit order. It's a maker roll. Right, so it's waiting for someone to take that $100 before our bot replenish another $100. So as long as we keep the bot running for a few months, we can smoothly cash out for investors, where the investors will be happy because they're selling at a better price, and the project wouldn't complain because there's no crashing, there's no market sell. So everybody's happy in this case by having this a little quantitative tool for investors. So we can act as an advisor or quantitative a department for primary investors, primary market investors. So providing them with all the necessary tools for the secondary markets. So this tool is now rolling out to investors as well, and we're trying to expand on that.
Yeah, very interesting. Thank you for explaining that. And what regions or jurisdictions are most crypto friendly today when it comes to cashing out?
Well, this is a global thing because we're doing things legally, right? So we don't have to worry about the jurisdictions. As long as we buy the rules by the SEC, we should be fine globally. So this is my take. SEC is probably the hardest to work with on all different regulations. So again, we have to be a maker role. There shouldn't be any price manipulation with this cash out. Right. One thing we to take note is this is very different than OTC deals, because this is purely trying to help out investors cashing out large amount of token, but in a slower method. But this is cashing out into USDT. So we will not associate anything with fiat, because fiat gets into a whole different ballpark. So we're still in the crypto game, and we're not doing any sort of fiat cashing out or OTC deals. So we were not going to touch that. That's another red flag we're not going to enter.
Yeah, thanks. And about MyTrade AI, there are a lot of AI in trading now. And what do you think? What's actually working and what's just marketing?
So the AI trading is the third department from MyTrade. And how we started out was we initially had a quantitative trading bots and running for 3.5 years, and we discovered there has been a lot of rooms for improvements, because previously we had to use large amount of funds from clients, and then we only were using like 1 BTC out of 20, so 1 out of 20 BTC to actually operate, and the 19 other BTC were placed as the margin calls. So we're trying to basically using very little funds to make trade, and the annual returns were 20-30% a year, which is relatively low in this crypto trading environment. So how we decided to improve upon is basically make it more efficient for the capital efficiency. So instead of asking clients for 20 BTC, we decided to just use 1 BTC from ourselves to make the equivalent results. And at the same time, if we can change the the tolerance on the risk factors, we could potentially make a bigger gains. So we've been experimenting with the risk control parameters and also the game. So we were trying to having a tolerance of backtrace up to 30%, but then the gains annually could potentially be 2x. So we were trying to experiment different factors and parameters so that we could have a better gain annually. And what we decided to do is expand not just to BTC trading, but all pairs all over OKEX and Binance on these two tier 1 exchanges. So we have monitored over 500 plus assets on these two tier 1 exchanges to monitor their order book and monitor potentially trading signals, and that's what we use internally. So we're not providing all this to the public yet. But one thing we could help the public, so if we had any traders coming to us asking for different signals, so we could potentially helping them as a one-on-one advisor. We wouldn't be giving them precise entering and exiting points, but we would providing them with a direction. So we would have a region where we expect this could likely fall within this region. Let's say the BTC price, we're seeing a region somewhere between 80K to 90K. So this is where we can advise traders to trade within this region. So we do have a service for these whale traders who has over 100K in assets in management. We could provide them with some signals on where the direction potentially can go. Of course, this is based on our technical indicators and experience. We're not going to guarantee anything. It's not a financial advice, but we do have a very good, winning rates on the directions. Yeah, so that's our third service for whale traders. We could help them, but again, it's mostly for our internal trading purposes.
Okay. Very interesting. And what do you think? Will AI fully replace human traders in future?
In Web 2, yes. In Web 3, no. So my take in Web 3 is a lot of these Web 3, the directions are affected by news, right? Politics and whales or institutions. So it's not based on any traditional historical pattern. So AI trading will have a very hard time. This is why we call it semi-AI or semi like quantitative now. We don't want 100% be relied on bots because there's no historical pattern to take on. So if there's any political influence or any like public companies from Web 2 wanted to come in and make a big purchase, that's all going to impact on the direction, and it's going to be a very sudden directional change. There's no historical take on it. So AI bots, we really wouldn't be able to help us besides the monitoring work. So we would be relying on AI bots to monitor what's happening on the Orderbook. Right? So if there's any sudden directional change, our bots will notify us. So this is important to be notified on time, but AIs will have a hard time making decisions to go long or short, unfortunately. So historical quantitative data showed us it doesn't work that well. So there's no fixed pattern to it. It's very random sometimes. So I wouldn't recommend anyone do quantitative trading in crypto. It's going to be very low profits because majority of the time it's going to be losses, right? So there's a few times where the directionals are consistent where these quantitative funds can make profits. So I wouldn't recommend it. So a lot of players have attempted and a lot of them have failed because one mistake will pretty much kill all your profit in the past years. So that's my take. And I've seen a lot of big whales coming in with lots of assets, great reputation and background, and the end result just didn't end well for them. So they have a hard time lasting more than 5 years. So that's my take on quantitative trading with AI bots. So let human also jump in with some important decisions as well, because humans has a good experience on at least a 4-year cycle with the bull run. It was the Bitcoin halvings. So the individual experience will be greatly helpful on top of the quantitative monitoring part.
Yeah. Thank you for such a great answer. What exactly makes MyTrade the next gen choice? There are thousands of signal bots, market makers, or OTC desks. What's the secret? Yeah.
Okay, so I mean, every department has to stand out by itself. I cannot speak on entire 3 departments, right? So the MM will stand out by itself because right now I haven't been able to identify another market maker who is transparent and legal. So that makes us the only one. So that stands out by itself. Cash out tools, there are tons of them out there. Every secondary market tools or quantitative traders, they have similar tools. It's not hard. So we use that tools to help investors because we see they don't have it. A lot of them they don't have it. So we provide them with a tool because we wanted to build up a relationship with investors and help them with their portfolios. Because their portfolios, if they're not using the right market maker, their portfolio can be killed in half year to 1 year. So that's something we wanted to approach the investor with, to enter the dialogue with our cash out tools. So it's a strategic tool that we use to build our relationship with investors. Then the AI trading is definitely on the unique side. I haven't really been able to identify a lot of like signal tools that monitors the Orderbook of all these exchanges or trading pairs. I've seen tools that monitor BTC and Ethereum with the bigger assets, but I haven't really seen any tool that monitor like over 500 plus assets. So that's something we're trying to take a leading initiative in experimenting. So it's not all gonna go smoothly because as we monitor hundreds of assets, we couldn't really trade all of them simultaneously, of course. And we're gonna pay our tuition as well. As we monitor, it doesn't guarantee profit because there's a lot of fake signals or fake signals that the other market makers are trying to inject onto the Orderbook. Like as an example, I can give you. Let's say we usually monitor Orderbook to identify where the whales are, like where they're putting the buy support and where they're putting the sell pressure. And for example, a fake signal can come in from another market maker because they're trying to, encourage, I guess, all the buyers or traders to come in, and they provide us a fake signal where they're putting a huge buy supports, right? While the market price is already really, really high, and they want more people to place buy orders, so they put a huge buy order, around the market price. So they're trying to fake it. And those who doesn't have a sufficient experience, they think that's a real whale putting a big buy order. So they usually try to put a buy order above the whales where they start entering at the market price. But what these market makers will do is that they make these big orders dynamically shift. So it looks like let's say the price is at $10, right? So let's say these market makers put a big order at, let's say, $9.5. So it makes you feel and think that whales are coming in at 9.5. So buyers were organic or normal traders will put orders at 9.6 or 9.7, 9.8, right? But that's where they start to lose money because what these market makers will do, they're going to start lowering their price where they're manipulating the markets, and they make you enter at 9.6, 9.7, 9.8. But as price drops, you'll see that 9.5 big buy order is also going to shift down. It's going to shift down to 9.2, 9.1, right? So it's constantly showing a big buy order, but it's going to constantly drop on you. So that's a fake signal. So this is something that's going to be very hard to tell. So we're trying to identify these by also looking at other parameters to see, analyzing, is this something that's coming from a market maker, or is this coming from a real, like a trader, a real whale? Because a real whale, when they put in a manual order, that price usually sticks. It doesn't dynamically shift. Yeah, so we'll have to do a lot of these, coding. We're strategically able to tell whether signals are real or fake. It's a very hard challenge to tackle. Yeah. So we're also paying our tuition fees too at the moment. Yeah.
That's very interesting. And what are the biggest challenges for you right now?
Yeah, so right now we're trying to let more people aware of MyTrade side. Because that's where majority of the projects are still having a hard time finding us. So what we have done previously is more trying to work closely with the exchange BDs with the listing team, because that's where the closer to the projects, right? They're working with the projects on secondary market listing, so that's the best time to get a conversion rate or help them choose the right market maker. But at the same time, we haven't really spent much time with investors we're public speaking yet. So this is our first video call to let a mass audience, also investors, aware of us and aware of the pitfall that's on secondary markets. So by choosing the wrong market maker is essentially going to kill their portfolio projects. And I hope that they can be aware of it. I hope they can speak to us with a consultation call. So we would love to help investors to share with more insights on how market makers typically can kill a project. So this is the reason why we're here and trying to let more people aware of the pitfall and the things that how we can do it correctly.
Thanks. Yeah.
So that is the biggest challenge for us, is to how do we let more people know about us and about the pitfall.
Yeah, I wish you best of luck with that. And how do you deal with competitors who maybe overpromise or operate like Shady, but still attract clients?
Oh yeah, it's very easy for the illegal market makers to attract clients. Yeah, because they can make everything look attractive, right? Like they're putting a huge makeup on just like on girls, right? And the girls will look very attractive. So it's not hard for illegal market makers to onboard clients. So it's really a choice for the projects, right? Like, do the founders want to do things for the long term for these utility tokens? If yes, then we will be the best choice. And if they wanted to do shady activities themselves, a lot of founders wanted to do pump and dumps themselves, then of course they will find illegal market makers. And one of the things that makes us very attractive as well, besides transparency and being legal, cost-wise, we've been able to make it extremely low. Because we are able to cut all the overhead costs and the communication cost, because we are a SaaS tool now. We're not just a market making agency, right? Market making agency, they like to operate more of in a black box, right? So, but as a SaaS tool, everything has to be transparent, and the clients get the dashboard themselves. They see the strategy directly, so that there's no need for communication with us at all on a daily basis. They don't have to ask us for a report, right? Or how much volume there is, or how much liquidity there is. They don't have to ask us all the questions. They can see everything themselves, right? So this will significantly reduce communication time. So we don't need a huge operations team, and that's able to reduce costs for the clients, right? So a typical project for the opening is going to be under $2,000, right? And for older project that doesn't have much trading activity going on, is as low as $500. So that makes it very sustainable for projects to go long term on secondary markets. Yeah. So these are the things we hope the projects can find out and by watching this video.
Yeah. Thanks. Crypto regulation is heating up. What changes do you expect? And are you being optimistic or are you worried?
I'll be very glad that the regulations are coming in, so that more people are going to operate legally moving forward. We should see more legal market makers, more legal exchanges upcoming. So I do like what the SEC is doing. So we just see one of the biggest market maker got bit ending up in jail. So that's definitely a good start. So we will have more and more market makers trying to do things legally, and then the entire crypto space can be more regulated. So we're definitely moving into the positive direction here. Yeah.
Awesome. Thanks. I will ask you now some questions. Please answer fast. I will give you the options.
Yep.
So, SEX or DEX for pro traders?
Yeah. So my take is, if you got $1 million and less, then CX is definitely more convenient and easier. If you got more than $1 million, then DEX will be definitely a much safer place to trade. So usually in a single centralized exchange, I don't really recommend putting in more than $500,000. Yeah, usually the tier ones, anywhere 100K, 200K, I would say is relatively safe. But more than that, then you can consider put into a DEX or decentralized wallets for DEX trading.
Awesome, thanks. Most overhyped AI trading promise?
None. I wouldn't have any promise for AI trading. It's very risky. Even with AI monitoring, it's still like in a casino betting.
Yeah, totally. One lesson every founder should learn fast.
I think secondary markets is definitely the biggest pitfall. That's where you'll lose pretty much all the money that you earned or the money that you raised from primary markets. It's a huge unknown space that people are unaware of. Very easy to lose money on secondary markets. Not just market makers, but there are tons of attackers that will also try to steal your money on secondary markets. So every exchange faced with tons of these attackers or hackers, besides just market makers. So this is something that every founder will have to eventually face and explore.
Best signal you ever caught?
I wouldn't say ever. I mean, we're able to catch a pretty clear signal on the bull run. As well as the 4-year cycle of Bitcoin halving. The cycle is actually repeating every 4 years, and usually the bull market lasts for a year and a half, and then it starts usually half year before the Bitcoin halving. That's where the price action for Bitcoin actually happens. That's where all the altcoin are also starting to perform as well. So normally bear market is about 2.5 years. So there's one good signal half year before Bitcoin halving by longing, and then right around this time, we're near the end of the bull market, and there's a very clear signal for shorting. So anytime, for example, this time around, we did give a signal out publicly saying that it was 2 months back, about 100K, where it was reaching the new peak of 110K. So we did give signal to our whale traders or clients about shorting above 100K for Bitcoin. So that was a very clear signal as well. So there's really two clear signals every cycle, one long and one short. So that's where the best signals I think everybody should catch, especially for the long-term traders. If you're not in for a short in and out. So if you're the long-term trader, then those are the two clear signals that you can get by knowing the cycle of Bitcoin halving.
Nice, thanks. One crypto myth you wish would die?
I wouldn't know. I don't know. Yeah, that's the honest answer.
Okay, and could you give just one advice for young traders?
For traders, lower your leverage for futures. I know everybody wants to be in the casino, taking bets. So long and shorts, whatever you do, I recommend 3 to 5x leverage. Don't go over 10x because it's very easy to liquidate, force liquidation. So that's my tip and advice for traders. And lower your frequency of trading. Don't go for high frequency. It's like making multiple bets too fast, too frequent, and you'll always have one bet that's a large bet that you fail, and then you will be out of the casino game. So it is a zero-sum game, and do trading less frequent, less leverage. If you got big money, just do focus on spots. Don't touch futures.
Yeah, thank you so much for such a great conversation, such useful advices. Thank you so much, David, for coming. It was such a pleasure for me to chat with you.
Yeah, thank you for hosting me.